long-term view on the markets? That's something that we'll try and decode with Rohit Seksaria. He's the fund manager equity at Sundaram Mutual, joining us on the show. Rohit, hi, good to be speaking with you. Well, first up, what's your sense on the market? Are we likely to be a lot more sideways, at least in the first half of this year, or do you anticipate that bulk of the correction is over and we'll resume the uptrend?
I agree. I guess first half would be more of a sideways. Actually, what we think is year 2025 will be more of a consolidation year. We had 2 good years, good run in the markets, and so we are sitting at a point where valuations are slightly higher and earnings growth are slowing down. So in such an environment, we believe that 2025 will be consolidation year, and especially the first half. Yeah, first half, this will definitely be a sideways kind of a market. It's our guess.
Sideways in the first half, but what do you think is the best strategy for the year? Stay with the momentum or actually do the reverse, stay with the ones which have underperformed last year?
Actually, in general, the momentum strategies don't work when market direction changes. So if the view is the market is going to be of a consolidation phase, then I won't advise staying with the momentum. It will be better to be on slightly defensive bets or with the ones which have underperformed slightly last year.
FMCG fall into that basket then? Consumption, do you anticipate it to recover because the upper end of consumption was doing well in any case? Do you now anticipate the mid and the lower level to pick up too?
Actually, yes. What we are betting on is the rural consumption, which was weak so far, is showing some signs of revival. And thanks to the multiple state government schemes of cash doles, that may pick up further. So rural consumption may be a better theme to invest in going forward into this year.
All right, but also help us with your take with respect to the expectations from the earning seasons as well, because we'll just kickstart and IT definitely will be the first one to come out with the earnings. So any sector that stand out where you will be keenly watching out for the earnings and you are expecting a good set of numbers?
In terms of the good set of numbers, see, numbers will be steady either both from the BFSI and IT. Those are the two sectors where we are significantly overweight. And on both the sectors, we expect steady set of numbers. From BFSI, the key worry last quarter was retail asset quality was showing some slippage. And the feedback we have got is that is stabilizing now. So their valuations remain reasonable. And that part, we are quite confident that that part of the market should do well going forward, especially in an environment where we'll be looking at RBI rate cuts. We believe that part of the market should do well going forward. IT has been another steady growth story. Here, the on-ground feedback is quite positive, that in terms of there's some demand revival. So we should see some better order win rates. And going forward, we should see better growth rates into next year.
All right, but Rohit, also help us understand your take. I just wanted to have your take on some of these jewelry stocks as well, because I believe that you also have Kalyan Jewelers as one of your top bet ideas within the mid-cap space. We just had the numbers, or rather the Q3 updates coming in from Titan. So what is the expectation that you're building in from the jewelry counters? Because I was just reading a report which was referring to that the SSSG growth, the footfall has been great, the demand is really strong on ground, but given that we not just have Titan right now and so many other players as well, how do you see the sector moving?
Consumption has been lackluster last year, but within that, one segment which was growing last year was jewelry, and that continues going forward also. So jewelry, we have been overweight across all our funds within Sundaram. We across all the different names, we maintain overweight on the jewelry basket. See, jewelry side, multiple factors come in. Right now, what's driving in is more demand related to the marriage season. This time, the marriage season is expected to be good, and that should help drive better demand for the jewelry segment. Prior to this, the jewelry segment benefited from the duty cut on the gold, and so this has legs to it, and this can continue to run forward. Even the formalization of jewelry is going through very fast, and that's why the listed players are gaining market share, and they will continue to do well. That's the bet we are taking.
Which are the spaces, Rohit, where you are underweight on or staying away from right now?
A couple of spaces where we are underweight are your capital goods, industrials kind of space, which have done very well last year, and which are dependent on the government capex. The other part where we are underweight is the global cyclicals like metals. Those are the segments where we maintain underweight.
Rohit, that was good to have your take on various sectors. But just Rohit, I wanted to get a sense from you. How are you reading this virus-related news? Because for India, it's just 2 cases that are being reported. Though for today, the benchmark indices in the markets are taking a knockdown. But understand that you must be talking to your investors in China, or maybe some of your subordinates there. So, if from the market participant viewpoint, if you can help us with your take, that are investors really concerned about this particular virus? How are you reading into this?
Post-COVID, every virus, investors do get concerned about it. But so far, whatever the details have come out regarding this virus, I don't see a cause of concern. So that's why I guess prior to just now, you had a couple of experts, and they also explained it that this virus, the way it expands and the population it impacts, is quite limited. So to that extent, I don't see a significant impact of this virus on the economy.
So far not seeing a significant impact. Thanks, Rohit, for making time and speaking with us. Appreciate you talking to ET Now. But let's put...
If you like this video, then like, share and subscribe to ET Now.